Interest is expensive. It adds up, and it adds up quickly, especially as you take out a larger amount. Interest can hurt as you're making your payments. So please make sure we have every single loan, every single credit card you get is going to have a truth in lending disclosure, which is going to show you how much interest you're going to pay if you make the minimum monthly payment. If you look at anything when you're signing documents, you should look at all of them. I understand there's a lot of it and you may not read everything, but please make sure you look at that truth in lending disclosure, because it's going to show you exactly how much you're going to pay. So if you're buying a home, you're buying a $200,000 house, your interest rate is 8%, you're going to pay $200,000 in interest if you make your monthly payment every month and do not pay any extra for 30 years, right? So you want to make sure you take a look at that. Sometimes it can be scary, but sometimes if you look at it and it's a little scary, that's a good thing, because maybe it's not something that you should do, or you just want to make sure that you are prepared for that, right? It's a great way for you to assess what you're doing. Credit score can decrease the more you use it. If you have your credit cards maxed out, your credit score will decrease. The more loans, more lines of credit that you open, it will decrease, because we see a higher risk that you could not make your payments, right? Debt can be dangerous, right? We talked about how you can use it wisely, but if you've got, I had 3 credit cards, they were all maxed out, couldn't make the payments. Eventually it became a larger sum that I had to pay back. They charged off, so a $500 debt became a $2,000 debt, because now there's extra fees and things like that. So debt can absolutely be dangerous. You want to be careful. Make sure you understand the terms of what you're getting yourself into anytime you're going into debt, right? And that you feel comfortable with it, okay? Any questions on any of this? Did I thoroughly scare you guys enough? I don't feel like I did, but all right. Debt can be very dangerous, so please be careful with it. All right, credit checklist. We're getting down to the end here, and then we'll play a little game. So do your own research. Please, again, we've talked a lot about making sure you guys understand what you're doing and why you're doing it. Do your own research. Make sure you're taking a look at options. Again, I'm at Nusenda Credit Union. I would love for you to take a look and see what we have to offer, because I can personally promise that it's going to be competitive with what anybody else has. I know our rates are good. We may not have the best rate when it comes to it, and so you may find a better one out there, but we're going to be pretty close. But take a look. Take a look around. Shop some local credit unions, see what the rates are, things like that. If you're buying somewhere else or you're buying whatever, just make sure you're looking at those options, right? When you're going to buy a home, you don't pull your credit, but you have an idea of what your credit score is. You can talk to different lenders, talk to them about what that payment would be, what the rate would be, things like that. So you can do your own research and make your own educated decision on that, okay? Don't borrow too much. My colleague always gives a great example of this. Talks about student loans, right? So as a student, he took an extra semester of college, didn't have the money to pay for it. Advisor told him, hey, let's go ahead and take out a student loan. You qualify for it. It's a low interest rate right now. It can help you out. You qualify for $15,000. Only needed $3,000 for school, right? Well, the advisor said, hey, we'll take out the 15, pay the rest back. You've got extra if you need it, right? So I always love the story, because do you guys think that they paid that money back? No, I see you shaking your head. No, right? 19-year-old just got $15,000 in the account, paid for school, that's $3,000. Now you've got a $12,000 sitting in your bank account. Do you want to give it all back, or do you want to, well, maybe I could go to Cabo, right? Don't do that. But they unfortunately did not. And in the end, you have to pay that $15,000 back, right? And interest, as we've talked about, can be dangerous and is expensive. All of that piled up on the $15,000 instead of, say, the $3,000 that they needed. Never borrow more than you need. So when you're given that option, you can just tell them, no, thank you. I don't need that extra. I only need the $3,000, right? Pay on time. We talked about minimum monthly payments. Please pay it on time. And then pay more than minimum when you can. Again, it's a great rule to live by if you can, but we understand Sometimes there's a tough month. Maybe you can't, but when you have the extra money, put it towards your debt. It helps out tremendously. You pay less interest, and in the long run, you're gonna save up more money overall, okay? Any questions on any of this? Feeling pretty good? We're all ready to go out and buy that house?
It's not about this per se, but
Okay.
the credit and checkings and savings.
Yeah.
Could you explain that a little bit to these guys? Because I know starting out with my credit card, I had trouble remembering what did what, and
Yeah.
I was getting things confused.
Absolutely. And it's easy to get confused. I mean, right? Because you've got a credit card, right? Nusenda credit card. And then I have a debit card that goes to the checking account. They're both cards, right? They spend the same. Both are Visas. I'm going to swipe them. Money's going to come out, right? And the biggest difference is, so checking, savings account is money that you have, right? So you establish a membership. We're going to use Nusenda. You establish a membership. You put $5 into your savings account. You become a member owner of the credit union, which is the biggest difference between us and a bank. You become a member owner. You have a say in what we do, how we do it. We have an annual meeting every single year. You can come and yell at us if we're not doing it right. Don't yell at me, but you can yell at some other people. But you get a say in what we do and how we do it. So you put $5 into the savings account, right? That money stays there, you become a member owner. And then you've got a checking account that you've got, your money going into. If you're working every single week, let's say you're making $500 a week, your $500 goes in there. That's your $500 in your checking account, and it's linked to your debit card, right? Which is completely different than a credit card or a credit that we're talking about, right? So that checking account is the money you've earned, that is your money. You need to make sure that you are using it wisely. We have what's called a Breeze account, if you guys are interested. It's a no overdraft account for you to kind of start out with. You cannot overdraft it with your debit card. It will decline anytime you try to swipe it and there is not money in there. It's a great way to start out, because as you're swiping your card, you don't think about, okay, I had $500, I spent $30 here, $50 here, $75 there, $120 to get, go to the game, whatever it might be. It all adds up quick. You can use your app to keep track of your spending. It is real time, but we don't always do that, right? Do you always do it? I don't always do it. It's okay. We're not going to pull out our phone every single time we make a purchase, because that's just not realistic, right? So with that money, you need to make sure that you are cognizant about what you're spending and how much you're spending, right? You need to be careful with it. You can easily get into the negative as you go on in life, and that adds up to a lot of fees, and it can be bad. For Nusenda, and I always plug credit unions, take a look at the overdraft policy. Ours is, you get five free overdrafts, but that's only for like automatic payments, right? So you have your utilities coming out, they automatically come out of your account. For your debit card, it is unlimited, but it's not advised, right? We are gonna decline the card if we see it's going too much. You definitely just wanna keep an eye on it. But the biggest thing there is, we're not gonna charge you a fee as long as you have your direct deposit coming in, things like that. That's going to pay it all back, right? So yeah, the checking account is your money that you've earned. It's yours, that you want to be careful with. Credit card's completely separate. They spend the exact same. When you go somewhere, they all have that Visa logo, right? Savings account separate. You want to put money in there as you can. I do a savings presentation that I talk about the importance of savings, and I cannot stress this enough. I read a thing about, has everybody heard of Warren Buffett? Right? Multi-billionaire, started from kind of nothing, started his own investment firm, owns Berkshire Hathaway. So one of the biggest things, and I just give credit to him because I read it from him. A lot of people have said this, investing in yourself, right, is the most important thing you can do. Do you guys care about your future? You care about yourselves, right? You kind of want yourselves to do well, right? So investing in yourself is the most important investment that you can make, and that starts with saving for yourself. So when you get paid, if you can save for yourself first, then pay bills, you're investing in yourself, right? So my direct deposit goes to multiple credit unions because I use different savings accounts as my way of out of sight, out of mind, but I'm going to try to invest in myself first. Once I get my paycheck, that money goes somewhere else because that's for me and that's my saving. Then the rest of it now can go towards bills. So if you can do that with yourself, it's going to help you build towards something in the future. But it'll help you when you want to make that purchase later on or whatever that looks like. So, but saving for yourself first helps. Did that help out a little bit? Did I do an okay job? You guys feel like you have a better understanding maybe of checking, savings, the difference between that and credit? Okay, good. And if there's any other questions about it? All right, so we'll just do a quick review here. Talked about vocab terms. What are some of the vocab terms we talked about? There were only 4. Principal. Do you remember what it was?
Money you owe, and money you need to pay back.
Money you need to pay back. That's the money you owe. Absolutely. How about one other? Term. And what was that?
Period of time for that money.
Period of time to pay back. Absolutely. Great job.
Longest time is 10 years.
Yeah, credit cards, longest time's 10 years. Interest, right? That's how much money you're going to pay back on top of the principal, right? When you're talking about interest rates, what's better for you?
The lowest one.
Lower the better. That's right. Credit scores. Does anybody remember what the lowest credit score is?
300.
300. What's the highest credit score?
850.
850. Not everybody's an 850. I've been in finance for 19 years, like I said. I have seen one 850 ever in my career. So obviously, striving for 850 is high. But I did talk a little bit about maybe what an A or a B is. What would be considered a good, or say, let's say an A credit score? Where do you want to strive for? 700. I heard 750. So yeah, an A I said was 750 to 850. 700 is truly the magic number from what I've seen in finance. If you stay above 700 with your credit score, you're going to get the better rates. You're going to get a better rate on all things that you do. You're going to have the ability to purchase things that someone that maybe is a 300, 400, even a 500 is not going to be able to.
650, almost 700.
Absolutely. So that is a great start. And that's the best part is you've got your credit card right. You've got you can make such a huge impact right now just by making your minimum monthly payments and extras if you can. That's a great place to be. When you first start, so like I said, your credit invisible unless you have some credit. And credit invisible can be tough sometimes, but we will still lend to credit invisible because we know it's not necessarily negative credit. There's just certain rates that go into that, or you may be limited on term because we don't have a history. And it's great to start building it as soon as you can. Build that history positively, right? Credit scores, loans and credit cards, benefits and risks of credit. So we're going to get into another activity real quick. We have until, I think, 11, right? Okay. 11:30. Oh, perfect. Even better. So we're going to talk a little bit about, one, I want somebody to share with me what's something that you are going to take away from this conversation that we've had. Who wants to share one thing? We can even just start over here. I'll make you all share. What's one thing you want to take away?
How to pay your money back on time?
Yeah. Make payments on time? Absolutely. That's smart. Yeah.
I think I'll take where you pay back, but like at the minimum, I want to go over so you have a shorter time of saving time and saving money
Yeah.
in the future.
Pay a little bit extra, right? Save money, save time. Yeah. Would you?
I guess make good judgment calls on what you spend your credit on instead.
Absolutely. Make the right decision. Make informed decisions, right? Do your research, understanding what your limits are. Absolutely. Would you?
Just because I do have my credit card already and I've been kind of learning as I'm going along.
Yeah.
My mom's made mistakes in her past that she's allowed other people to use her credit, and they actually brought it down because they were paying for stuff. And now recently she was just trying to take out a loan because my brother was having car trouble with his car. So she went and I think she tried to get $3,000 and they denied her because of a loan that she paid it off, but because of the time limit, they
Yeah.
had just like ended the account or took off the account, so
Sure.
she wasn't able to get that loan.
Yeah.
So probably just educate my family a little bit more and learn as I go.
Absolutely. And so I'm going to share something on that. Something I talk about a lot when I'm out talking about it is talk about finances, right? Talking about it. Finances is definitely something, and especially parents. My parents didn't talk about it, didn't want to talk about it, didn't share a lot. If we can have a conversation about it, we can learn from each other, right? Unfortunately, there's mistakes made. Like I said, I have no problem sharing all the mistakes that I have made because I want you guys to not make those same mistakes, but we can all learn from them, right? And sharing those pieces. And making sure that, again, we talked about using wise judgment, right, for your own credit.
And just because of
Yeah.
that too, I feel like me and my older brother, he's 24 now, I'm 22.
Yeah.
So just because of her credit that she's had in the past, she's tried not to inflict that on our credit that we're
Yeah.
starting, and she's trying to build our credit so that way we can be able to purchase houses and things like that in the future.
Absolutely. It makes a tremendous difference.
Yeah.
That's amazing. We'll tell her thank you.
Yeah.
That's great. We all make mistakes, and sometimes it's tough talking about them. You know, I've been an idiot plenty of times. I don't mind saying it. But, you know, we can make the wise choices now. And so, yeah, thank you very much for sharing. Yeah. All right. What's one thing you want to take away?
Good interest rate.
Get that good interest rate, right? Always negotiate. If you go to a dealership and they tell you this is the best rate, there's probably a better one. Always try to get a better one. All right.
How to build credit and manage credit.
Yeah, how to build credit, using it wisely, right? We want to make sure we're doing it the correct way. Thank you guys very much. You know, we can talk about this all day long, and I know it can get very boring. I've been in it a long time. You know, when you get over an hour long, or even sometimes over 30 minutes, it's very boring. Money, numbers, boring, things like that. But finance, all of this stuff, it will affect the rest of your life. So please take a look, make sure we understand what we're doing and how we're doing it. If we want to take a 5-minute break here, then we'll come back at 11. Is that all right with you guys? Take a 5-minute break, stretch our legs. I know we've been talking about a lot of stuff. And then we'll do a little activity. You guys all have a sheet that I'll have you guys write down some things on, right? We'll come back to that. All right, 5 minutes. Take a quick break. Anybody have a dream purchase? Let's say vehicle. What's a dream vehicle you want to buy someday? Anybody have one? Nice big truck, sports car, anything?
McLaren.
McLaren, you're going big. Yeah, all right. I like that. Any particular one? I don't really know their models. No? Yeah.
750.
Okay. All right. Anybody else?
Oldie.
A what?
An oldie.
An oldie? Like a,
Condition.
yeah. All right. They had a car show for Father's Day out in Edgewood, yeah. Some beautiful old Mustangs, Camaros, right? Yeah. Beautiful vehicles.
Stop truck. All that.
Oh, yeah. I love that, like early 90s style box, yeah. I'm a fan of those. I'm a big fan. We have someone at work that drives one. An old, like an F-250, lifted a little bit. I'm like, God, if you ever want to sell that, man, you let me know. Because I want it. I don't care how many miles it has on it. It should go. All right, we'll go ahead and get started. So, we talked about a lot of different things with credit. Now we're gonna play a little game or activity. It's called myth or reality, right? So I'm gonna read a statement, and you've got there. I'm gonna read 12 statements. So on your list there, 1 through 12, you're gonna write down myth or reality. Okay? So kind of a true or false. If you're not sure, because some of them you might look at and you're like, I might read and you're going to say, I have no idea. Put a question mark. That's okay. Because we're going to talk about them all, discuss them. But if you want to take a stab at if you think it's a myth or if you think it's factual and you think it's real, then you can put that. All right, we ready to go? How you guys feeling now? We've talked a lot about credit. You feeling pretty good about it? All right, some of these even I was like, I don't know about that. All right, so number 1. Myth or reality? Debt is the same as credit. And I'll read it one more time. So again, myth, write down myth or reality. And the statement is debt is the same as credit. Everyone good with that one? All right, number 2. The statement is, there is no such thing as good debt. So is that myth or reality? There is no such thing as good debt. All right, everybody good with that one? Number 3, if you are worried about debt, you may have too much. Myth or reality? If you are worried about debt, you may have too much. Everybody good? Everybody got 3 answers, right? All right, number 4. Co-signing a loan may affect your future ability to get a loan. And we talked about this one a little bit. Co-signing a loan may affect your future ability to get a loan. Is that myth or reality? All right, number 5, if a debt collector calls you about repayment of a debt, you have the right to tell them to stop calling you. Is that myth or reality? And I'll read it one more time. If a debt collector calls you about repayment of a debt, you have the right to tell them to stop calling you. All right, number 6. Everybody has 5 answers down, right? Yeah. Number 6. The majority of Americans who filed for bankruptcy due to medical debt had health insurance. Now, this is one we didn't really talk about, but so you can take a stab at it if you like. Myth or reality? The majority of Americans who filed for bankruptcy due to medical debt had health insurance. Number 7. Information in your credit report is used to make a lot of decisions about you. Myth or reality? Information in your credit report is used to make a lot of decisions about you. It's like someone else is judging you all the time. Number 8. Whenever you check your credit report, your credit score goes down a few points. Is that myth or reality? Whenever you check your credit report, your credit score goes down a few points. All right, number 9. Everybody's got 8 answers, right? Okay. Number 9, myth or reality? It's not uncommon for people to have more than one credit score. Again, it's not uncommon for people to have more than one credit score. Number 10, always close credit card accounts that you do not regularly use. keeping them open hurts your credit score. Is that myth or reality? Again, number 10, always close credit card accounts that you do not regularly use. Keeping them open hurts your credit score. All right, number 11. Everybody good? Yeah. Number 11. About 1 in 10 U.S. consumers are considered credit invisible. So number 11 is about 1 in 10 U.S. consumers, which is approximately 26 million people, are considered credit invisible. All right, and then number 12. Credit reports and credit scores are created by the government and provide official information used to identify people, like a driver's license or passport. It's a very long one, sorry. But I'll read it one more time. So is this myth or reality? Credit reports and credit scores are created by the government and provide official information used to identify people, like a driver's license or a passport. All right. Everyone got their answers down? Everyone got 12 answers? Nobody has 13? Making one up? Okay. So we're going to talk about them a little bit. You do not have to share out loud, but if you'd like to, again, this is where we get to we talk a lot in Nusenda about demonstrating some vulnerability. We kind of share maybe sometimes whether we know something, don't know something, and talk about it. So, statement number 1. Debt is the same as credit. Is that myth or reality? If you think it's reality, raise your hand. Debt is the same as credit. If you think it's myth, raise your hand. Debt is the same as credit. All right, guys, we're listening. Correct, it is a myth. So credit, what is credit again? We talked a little bit about it.
So where you can get loans.
Absolutely. Credit is the ability to borrow money, right? Get money from someone else, loans, credit cards. Debt results from using that. Debt is the loan or credit card balance, things like that. The principal that you owe is debt, right? If your debt is too high, is that bad? Absolutely. It can negatively affect you if you're trying to purchase something else. So you want to keep that managed. All right, number 2. There is no such thing as good debt. Who wants to share what they thought? I won't make you raise your hands this time. Who thinks it's reality? I think it's reality, reality. Most people. You two are the outcast. You guys think it's a myth? Not sure? Okay, yeah, all right. Way to be honest, right? Unsure. There is no such thing as good debt. That is a myth. And I know it's kind of tricky because you're thinking, oh, debt, scary, right? There's no such thing as good debt. So the reason there is borrowing money to further your education with a certification, license, or a degree that can help you get a better paying job is an example of good debt, right? If you finish your studies and your future income will support the amount that you borrow, borrowing money to get a reliable car, to get you to work might be another example of good debt, as long as those terms fit into your budget, right? And so that's what we talked about. Debt is scary. You don't want to be in too much debt, but there is good debt. If you're taking out a student loan, you're going to better yourself. You're investing in yourself, right? If you're buying that vehicle, you work in construction, you need that truck, right? That is good debt because it is being utilized to further what you are doing, your career, whatever that might be, right? Now, we can use that as an example of, do you need that new sports car, right? Is that good debt? It's fun debt, but it's not necessarily good debt, right?
Actually, what I put on here, it depends on like if you actually need it or if you're comfortable with being in debt.
Absolutely, depends on you need it. And there's another question in here that's kind of similar to this, but absolutely, that's a great example. If you're comfortable with it and it's helping you, that is good debt, right? And actually, the next question right now, if you are worried about debt, you may have too much. Is that myth or reality? Who wants to share what they put? Anybody want to shout it out? Right.
Yeah.
Reality? What did you think?
I put reality because
If you're realizing that you've racked up too much debt and it's starting to cause you stress, then you're not being responsible enough to make sure that your debt isn't getting too high.
Absolutely. Correct. Reality. Both of you are correct. And the exact reason here, so they put on here, one way to know if you have too much debt is if debt causes you a lot of stress. If you are stressed about it or think you have too much debt, you have too much debt. There is not a magic number that I can give you that says this is too much, right? It all depends on your situation and what you are comfortable with. It very much goes back to the last one, right? Good debt is the debt you can handle. Bad debt is the stuff that stresses you out, keeps you up at night, makes you worried that you're not going to be able to make your payments, your rent, mortgage, car payment, whatever that is. That's bad debt. If it's stressing you out, it's too much. All right, number 4. So co-signing a loan may affect your future ability to get a loan. Myth or reality? Who thinks that is a myth? Anybody think it's a myth? Who thinks it's a reality? Anybody unsure? Right? Okay. Lots of realities out there. Co-signing a loan may affect your ability to get a loan. And we talked about it a little bit, right, with your mom. Yes, it can. When you co-sign, we did not use the official term of co-signing, but when you co-sign on a loan, you are owning that debt. You are saying, if this person does not pay it, I am responsible for it, right? I always like to scare you guys a little bit, right? So when you go ask your parents to co-sign for a loan on the car and they're like, no, I can't do that, it's because it is going to negatively affect them overall as well. Maybe not negatively affect is not the right word, but it will affect their overall credit portfolio, right? So if someone asks you, hey, I want to buy this for $10,000, you have good credit, can you co-sign? You need to think long and hard about it. I mean, I would say most of the time you're going to want to say no without even thinking about it. There's maybe certain circumstances where you help someone out, but you better be ready to pay that back. I have unfortunately seen people, auto loans, right? You co-sign on an auto loan. They can't make the payment anymore, so then someone else is driving the car and now you're making that payment because you co-signed for it, but you don't even get to drive the car because somebody else is, right? I mean, it doesn't make any sense. So just make sure asking someone to co-sign, or if somebody asks you to co-sign, you are taking responsibility for all of that debt. Does that make sense? It's kind of tricky, can be confusing, but you are responsible for it. All right, number 5, if a debt collector calls you about repayment of a debt, you have the right to tell them to stop calling you. Is that true or false? Who thinks it's true? Who thinks it's reality? Okay, a few of us, who thinks it's a myth? Think it's a myth? Or unsure? Unsure, right? So for this one, if a debt collector calls you about a repayment of a debt, you have the right to tell them to stop calling you. The answer is, it is reality. The Fair Debt Collection Practices Act, a long word, FDCPA, gives you the right to tell debt collectors to stop contacting you. It does not cancel the debt. It tells them that they can no longer call you about it, but you still owe that money, right? It also does not stop the debt collector from reporting non-payment to the credit reporting company or from suing you to collect that money later on. And so you can absolutely tell them to stop calling you because they're probably calling you multiple times a day. But you still need to figure out how you can maybe repay that loan or talk to someone in that organization about changing the terms or whatever that looks like. We have a whole group dedicated to rewriting loans that someone cannot repay, right? It doesn't help anybody if the loan is not paid, right? We lose money, you get bad credit. If we can work out a way that we can meet in the middle somewhere, the financial institution is going to get the money back and your credit gets saved, right? So there's usually a happy medium somewhere. All right, number 6. The majority of Americans who filed for bankruptcy due to medical debt had health insurance. We didn't talk about bankruptcy. Does anybody want to share? Do you know what bankruptcy is? Anybody know?
Well, you run out of money. Run out of money.
Yeah, kind of when you run out of money, you can't pay your debt obligations anymore. You have to file.
It's like property once you file for bankruptcy though.
Did you say, will you lose?
You lose property.
You can, yes, absolutely. There's different chapters of bankruptcy. There's different things with it. There's a lot to it. People get paid a lot of money because bankruptcy is very confusing and they study it for years and years and figure out the loopholes. But for you guys, yeah, bankruptcy is unfortunately bad and it means that you are unable to pay your debt. So, myth or reality, the majority of Americans who file for bankruptcy due to medical debt had health insurance. Who thinks that is a myth? Okay, majority of us, reality. Anybody think it's reality or unsure? Reality? Reality in the back? All right, majority of Americans who filed for bankruptcy due to medical debt had health insurance. It is reality, unfortunately. Medical debt can pile up when someone becomes seriously ill or is injured. Even with health insurance, co-pays and deductibles can add up. This is, again, another reason to have an emergency savings. Medical debt is tough because it can pile up quickly, but when you need medical services, you need medical services, right? We would all rather live and owe some money than not live and be debt-free, right? Doesn't matter. So it is tough, but a majority of Americans who have filed for bankruptcy due to medical debt, unfortunately did have health insurance. Health insurance does help out. This kind of goes with credit. With whoever you are employed with, make sure you understand your health insurance plan. What is the maximum that you are going to pay? What is your deductible? And so how much are you going to have to pay every time you go to the doctor? Different things like that. Are you able to do a health savings account, an HSA card? It's a great way to put money to the side, specifically for health purchases, and that is pre-tax dollars if you do that. So I know we're not talking about any of that, but my advice, please understand your health insurance. And if you're able to do an HSA or a FSA, which is a flexible spending account, please do, because it can help. Just as an example, I took my son to the doctor 3 weeks ago, $250. That's how much it cost. So you have to be ready to pay that money. Yeah.
What health insurance would you recommend?
Whoever your employer offers. That's the tough part. Your employer, it's going to depend on what they offer. I have had very positive experience with Presbyterian. If your employer offers that, it's a great one. Loveless has been pretty good. I've heard good stories. Some other ones that are out there, right? Blue Cross Blue Shield, Cigna. I don't have a whole lot of experience with some others. Has anybody had a positive experience or negative experience? Maybe not. Don't share negative. But yeah.
We have a Blue Cross Blue Shield, and my brother, he got bit by a rattlesnake, and there was a lot of expenses with that.
Okay, yeah.
You had to get airlifted to Albuquerque.
Yeah, rattlesnake bite's serious business, right? And the antivenom is not cheap. Yeah, absolutely. Yeah. So it really does depend. If you're going to do it independently, I know there's some free resources out there to take a look and compare. So I would just make sure, same with credit, you want to do your due diligence and take a look around. But it all depends on whoever your employer provides. For Nusenda, we provide Cigna. There's different plans that you can get, right? You pay more up front and you pay less when you go to the doctor, or you pay less up front and you pay a little bit more when you go to the doctor. That's the plan I have. And I put a bunch of money into an HSA, so when I have to pay $250, I just use the HSA card, right? But you have to decide what best fits you. Fits into your budget, things like that. The nice part is health insurance is a pre-tax expense. So you do get to do that before you get taxed, right? All right, so now that we've made everyone sad about health insurance, I apologize. We can move on. So information in your credit report is used to make a lot of decisions about you. Myth or reality? Anybody want to share what they put? Information in your credit report is used to make a lot of decisions about you. Who thinks it's a reality? Reality, 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 reality. Anybody think it's a myth? All right, it is a reality, right? We talked about it. The credit is going to follow you around for the rest of your life. You don't get to run away from it, unfortunately. An individual's credit report might be reviewed by a potential employer. I can tell you to get a job as a financial advisor at Nusenda Credit Union. Your credit is going to be checked. When I was hired, they checked my credit. And it's very simple. If I can't manage my credit, how am I going to talk to you guys about managing yours, right? And that's unfortunately the truth about it. By a potential employer, or to get security clearance for the military or any government job. It can be used by a landlord. This isn't something that used to happen, right? To buy a house, you're always going to get your credit checked. Now, if you're going to rent an apartment somewhere, most likely you're going to do a credit check, and they're going to make a decision based on that. That's something, unfortunately, credit follows you around everywhere. It can be used, by a landlord who is deciding whether to rent to a person, an insurer, utility company, deciding whether to impose a security deposit, and a lender deciding whether to issue a credit card, what interest rate to offer on the credit card, right? Lots of different things. We covered a lot of pieces that it affects. All right, whenever you check your credit report, your credit score goes down a few points. Myth or reality? Anybody want to? Myth? Okay, myth. Unsure? All right, whenever you check your credit report, your credit score goes down a few points. So this is a tricky one because it's kind of both, but it is, we have a myth down. You can get a copy of your credit report once each year for free from each of the 3 nationwide credit reporting companies. And that website is annualcreditreport.com, right? So annualcreditreport.com, you can check your credit. Does anybody remember the 3 credit bureaus? They're not necessarily rememberable names, but anybody want to take a stab at one? I said all 3. Which one does Nusenda use? I shared.
Something that starts with an E, that's all I remember.
E, okay. Hey, Experian. Yeah, absolutely. Experian is the one we use. And so now where it is a reality is if you check your credit to apply for something, your credit score is going to go down, right? I just applied for an auto loan a few months ago. My credit score went down because my credit was pulled. Generally, it's not big enough to make a big impact, but you are going to see a difference, and you'll see it go back up afterwards. Sometimes to open accounts, to open a membership with Nusenda, we do a credit pool so that we can make sure, again, that you are using credit wisely. And so when that happens, you will see your credit score go down a few points. But again, it will come back up pretty quickly as long as you do not continuously check your credit, right? My advice is if you're going to buy something, know your credit score. Do not let anybody pull your credit. Make sure that you are well aware of when it's going to be pulled. As I was auto shopping, I made sure nobody pulled my credit until I was ready to make the purchase, and then they were able to pull my credit because I don't want 15 different companies pulling it, because that will negatively affect you. Number 9, it's not uncommon for people to have more than one credit score. Myth or reality?
Reality.
Reality, absolutely. So different banks, credit card companies, and lenders may use different credit scores because they are based on different criteria, gathered at different times and calculated in different ways. I already talked about there's 3 different credit bureaus. All of those scores are going to be different, but every single bureau is also going to have different reports. When you open a new membership at Nusenda, we use a certain credit bureau. If you go apply for an auto loan at a car dealership and they want to use Nusenda, they actually use a different credit report. So it is very much so different. You can have, I think, 12 different Experian credit score numbers. Depends on what you're doing. Number 10, always close credit card accounts that you do not regularly use. Keeping them open hurts your credit score. Myth or reality? Anybody think that's reality? Anybody think it's a myth? A lot of people unsure. Maybe both.
Reality kind of is.
Yeah.
So if you have it open for longer, then, because doesn't it hurt your credit score if you close the credit card as well?
So it does.
If you
Yeah.
pay it back, you'll hurt it as well. So.
Correct. If you have a balance and you're not paying it back, it's going to hurt as well. So in this particular case, it is a myth. So if a person closes most of their credit card accounts and keeps only one credit card open with a high balance on it, it hurts your debt to income ratio, right? It's going to hurt your overall available credit. It is helpful to keep unused credit cards open to bring your total amount of debt to income and your overall credit use high. The other part of that is part of your credit score is your history. How long have you had open lines of credit? I still have my original Citi card that I opened forever ago because I wanted to show that I have 20 years of history, right? If I close that, it shortens my length of history. So if you have an open credit card, my advice is you can cut it up when you get it, but don't close it because it does help you. It's open credit that you can, again, it's going to increase your history, but also it shows that your debt to income is lower, right? Your debt is not as high on that credit card. Now, on that caveat, make sure nobody else is using it. Double check it every now and then. All right, number 11. About 1 in 10 U.S. consumers, or 26 million people, are considered credit invisible. Myth or reality? Anybody want to take a shot? Reality? Yeah, I mean, it's hard to guess on that, but it is reality. So people do not have any credit record are considered credit invisible. Obviously, if you don't have any credit, you are credit invisible. You can still do certain things, but eventually you will want to start building credit. You can be credit invisible later on in life if you close all your credit cards, you don't have any credit open. After so many years, your history falls off, you become credit invisible again, and you have to start over and rebuild, right? So that's why it's always important. Keep a credit card open. Don't use it, whatever that looks like. You don't want to be, 80 years old and you're going to buy a car and they're saying you don't have any credit because you haven't used it, right? Which I have seen, unfortunately. Yeah. And it's frustrating. I mean, it's not the most pleasant experience. So number 12, last one. I think we just got another minute here. Credit reports and credit scores are created by the government and provide official information used to identify people like a driver's license or passport. So the most important part is there's credit reports are like a driver's license or a passport. Anybody think that's a myth? Yes, myth, myth, myth. Reality, anybody think it's reality? I got 1, 2, okay. So this is another one that's kind of a little bit of both. We have it labeled down as a myth. So credit reports and scores are created by credit reporting agencies. So they are not created by the government, but they are completed by data submitted by creditors, employers, things like that. Where it is used to identify you, as I just talked about, if you open up a membership at Nusenda, we pull credit and we use it as a form of identification. We're going to verify your address matches. We're going to verify your date of birth matches. We're going to verify if you walk in, and this is a great tool for us. If we pull your credit and it says you're 16 and I've got a 72-year-old sitting in front of me, I'm going, something's weird. Bless you, by the way. Right? So it's a great way for us to be able to kind of verify, or if we pull a credit bureau and it says you live in Maryland, but obviously you're in front of me and you have a local address, I'm going to start asking some different questions, maybe even calling the cops, right? You never know. But so that is kind of one of those tricky ones. It's not created by the government, but it can be used to identify you. So we talked a lot today. Any questions or anything you guys want some more information on?